All right, let's jump right in. TransUnion just dropped its Q3 2025 earnings, and believe me, the market paid attention. So in this breakdown, we're going to unpack all of it. The big numbers, what management's signaling, and of course, what this all could mean for the stock. So first things first, the headline number. TransUnion absolutely delivered a strong beat here. They posted an adjusted EPS of $1.10. Now, Wall Street was expecting $1.04. So yeah, they comfortably sailed right past that. A really solid start on the bottom line.
And you know what? It wasn't just about the earnings. The top line, the revenue, also came in really strong. We're talking 8% growth year over year, hitting $1.17 billion. That's another clear beat against what analysts were predicting. So just a really powerful performance across the board on both revenue and profit.
But, it's not always just about the earnings report itself. You got to look at the signals management is sending. And wow, did they send a big one. They've just jacked up their share buyback program to a massive $1 billion. That's a huge sign of confidence.
So when you put it all together, what you have here is a classic beat and raise quarter. It's exactly what investors love to see. They beat the expectations for this quarter, and they raise their predictions for the future. And how did the market react? Well, it loved it. The stock shot up over 3.5% on some really heavy trading volume.
Okay, so the big question is, where did all this strength actually come from? Let's peel back the onion a bit and look at the real engines of growth here.
And this is where the story gets really interesting, because the growth wasn't even across the board at all. It was really a tale of two different segments. On one hand, you had their U.S. financial services business just exploding, up a massive 19%. That incredible performance completely papered over a pretty significant 17% drop in their consumer interactive division. Now, that 17% drop might look scary, but this is a perfect example of why you have to look beneath the surface. See, that consumer segment looks weak because last year's number was inflated by a huge one-time contract for breach remediation. Once you pull that weird item out of the comparison, what's the real story? Well, the company's underlying organic growth was actually a super strong 11%. That's a much better picture.
Okay, so the numbers look good, but what's management saying? What are they doing? That often tells you even more about where they think the business is headed. So let's dig into the signals they're sending. And look, the CEO, Chris Cartwright, he didn't pull any punches. He came right out and said this was their strongest underlying performance since 2021. I mean, think about that. He's saying the business has the best momentum it's had in years. That's a really bold statement, and it speaks volumes about the health of their core operations. And, talk is cheap, right? But they backed it up. They went ahead and raised their guidance for the entire year of 2025. We're talking higher targets for both revenue and adjusted EPS. This right here, this is the raise part of that beat and raise that gets investors so excited. And let's circle back to that massive buyback program. They didn't just announce the $1 billion authorization and then sit on their hands. No way. They are actively in the market, buying back their own stock, $160 million worth in just Q3 and October alone. This is management literally putting their money where their mouth is, signaling they think their own stock is a bargain right now. All right, now this next part. This could be the biggest story of them all. Let's talk about the showdown that's brewing in the absolutely enormous mortgage market. This is a big deal. So can TransUnion actually win the mortgage score war? I mean, that's the multi-billion-dollar question that investors are asking right now. Because after FICO went and made some really aggressive price hikes, the whole game is changing. Seriously, the competitive landscape for mortgage scores hasn't been shaken up like this in decades. And here's how the battle lines are drawn. In one corner, you've got the longtime champ, FICO, who just hiked their price to about $10 a pop for a score. And in the other corner, TransUnion comes out swinging. Their response is to offer VantageScore 4.0, which they're a part owner of, for just $4. That's less than half the price. They are basically daring FICO to a price war. So what's TransUnion's game plan here? How do they win this fight? Well, their whole strategy revolves around this idea they call value redistribution. Their argument is simple. For years, everyone's been focused on the 3-digit credit score. But TransUnion is saying, wait a minute, the real value isn't the score itself. It's the mountains of raw credit data that we own and that the score is built on. They believe this showdown will force the market to realize that, shifting the profits away from the score maker, FICO, and back to the data owners, like them. Okay, so let's recap. We've got a fantastic quarter, super confident guidance for management, and a massive strategic battle brewing. Let's put it all together and get to our final call on the stock.
First up, let's just lay out what management themselves are promising for the fourth quarter. This is their official guidance, the numbers they've put out there for revenue, EBITDA, and EPS. You can think of this as the baseline, the hurdle they've set for themselves to clear.
So with that as the backdrop, what's our take? We think the momentum from that powerhouse financial services division is going to keep rolling. We also think those aggressive buybacks are going to provide a nice floor for the stock price. But the real wild card, the thing to watch, is how quickly the market starts to realize the long-term potential here. We're talking about the upside of TransUnion can really start stealing a piece of that huge mortgage scoring pie from FICO. So, when you add it all up, a huge beat this quarter, raised guidance for the full year, a massive capital return program, and what we see as a really smart, credible strategy to take on FICO in the mortgage space. For all those reasons, our rating on TransUnion is a solid outperform. And of course, we have to say it, just a quick reminder that this is for informational purposes only. It is not financial advice.